Today we will talk about tokenization. Today we have Romy Salmaan, Sofiia Moshina, Erik van Noort, Elena Comoreanu, and we're a course of investing and trading, fintech. In our table of content, we have introduction to tokenization, tokenization in collectibles, in art, in real estate, challenges and limitations, and then we will conclude everything and provide recommendations. So I will start by introducing tokenization. This is the process of converting real-world assets into digital tokens on a blockchain. So actually, this innovation is making it easier and more transparent and more accessible to buy, sell, and track assets such as real estate, art, and collectibles. It provides some benefits, like, for example, increased liquidity. So traditionally, assets like real estate and fine arts are really difficult to sell quickly. And tokenization really enables fractional ownership. So this allows people to invest in small shares rather than buying an entire asset. Then we have transparency and security. So blockchain technology, it ensures that ownership records are secure, verifiable, and transparent. So this really helps prevent fraud and makes transactions more trustworthy. Then we have lower cost and efficiency. By removing intermediaries like brokers and banks, tokenization reduces administrative burdens, and also it helps to lower transaction costs. So it will make assets trading more like efficient. So next slide is.
What is tokenization of collectibles? Tokenization of collectibles is the process of converting physical collectibles like Pokemon cards, stamps, or coins to PNFTs. PNFTs zijn physical non-fungible tokens. With a physical non-fungible token, do you grant the holder rights of the physical item. The tokenization process of collectibles. First, the physical item is sent to an expert for verification. Then the item is stored securely in a vault. Then the PNFT is created and issued to the owner. And at last, the PNFT can be traded on platforms like Magic Eden. The benefits of tokenization of collectibles. You got increased liquidity because the owners can sell portion of collectibles. You got also fractional ownership. More people can invest in high value items. Also, you got global accessibility, buy and sell collectibles worldwide. Fraud prevention, authenticity verification reduced by reduced counterfeits. And as last, transparency, the blockchain provides a clear transaction history. The current application of tokenization in collectibles. Museums and cultural institutes are using tokenization of collectibles to enhance the accessibility. Government projects preserving historical artifacts throughout tokenization. Auction houses using tokenizations to attract a wider customer base. And at last, collectible platforms expanding liquidity for various items. There are a lot of opportunity for growth and innovation in collectibles. The market growth is expected to be in 2030 like $212 billion. It's got a big opportunity to get integrated with Web3, expanding tokenization beyond collectibles. There's also democratization of ownership. More people can invest in rare items. There's also greater transparency, easier authentication of collectibles, and there are a lot of new revenue streams that are possible, like artists and creators can earn royalties. The role of government, companies, and institutions for collectibles. Governments got a big role. They can establish clear regulations for tokenizations and implement tokenization for public assets. A company can develop tokenization platforms and explore tokenization in gaming and digital markets, and also can educate the public on tokenization. The institutes can conduct research on impact of tokenization and form partnerships with big companies like tech companies.
All right. So I'm going to be talking about tokenization specifically linked to art. In the background, you can see the 14 small electric chairs. It's a series artwork done by Andy Warhol. The reason you're seeing this on the background of the slide is because this piece was sold in the world's first cryptocurrency art auction. And what that means that you could apply to buy a piece of art, specifically this piece of art, and out of over 1,000 people, final 100 investors were selected, and together they own 31% of this piece of art. And it was worth about 5 million, and the investors together own about 1.7 million worth of artwork. So they own about a third. So let's say you become a part owner. What happens to the art? Because this is a painting. It's a series of paintings. And this specific artwork was stored in an art storage facility that provides security and that is insured. So if you were to buy a piece of art, you can't expect it to be in your house. Usually it's loaned to art galleries or museums, and that's just to lower the risk of damage. And yeah, you get a little token that says you are a part owner. So historically, Christie's and Sotheby's are really big art galleries. They used to sell and auction the art. These big art galleries are slowly looking for other ways of selling the art pieces. There is a site these days, they're online, and they're also looking into the international art market. Imagine if these companies were to actually embrace cryptocurrency, a way to actually sell the art pieces, and if they were to implement the fractional ownership of physical art. This is probably going to be the future. You can already see other little galleries that are playing with this. And yeah, art is also a very conservative marketplace because a lot of these paintings are worth so much. And because of how they have a dual monopoly, Christie and Sotheby's, most traditional investors, they still like. Imagine if Christie's and Sotheby's, as a dual monopoly on the art market, embraces cryptocurrency, embraces other ways to monetize and to help artists sell their work. And in terms of technology, AI and AR are the new things that are coming up. Instead of traditional art that is painted, that is sculpted, these days you have traditional art galleries that are having partnerships with art auction houses. They're having partnerships with blockchain platforms, and they are really trying to advance the adoption of art tokenization. And for example, Christie's is partnering with a blockchain platform. They have their own cryptocurrency called Art, and are slowly getting into the future of art, which involves AI, and it also involves AR. And AR means augmented reality. It allows collectors to visualize artworks in their own spaces before purchasing it. It's creating a more buyer-friendly buyer experience. Christie has been implementing rooms in their own auction house with augmented reality. So as a way of selling paintings and artworks to international investors. A lot of new art is actually bought by Chinese investors. So this is an extra way they add to the buyer experience. These days, you also have a lot of web shop webinars and partnerships with art school to promote art tokenization, and some of these art houses mint their own NFTs. So this is the technology. And also the opportunity for the future, because liquidity is also, Sofiia mentioned, is key. It's really hard to sell a painting. Usually it's going through an art house, an art gallery, and they auction it off. It is announced beforehand, and the people that are interested in buying this particular artwork, they assign themselves to it. So imagine if you just can sell it online, have it sold tomorrow. The process will be much easier, and yeah, it is much easier to sell these paintings. The challenges are that it is harder to verify who you're selling it to. It's easier to be defrauded, and it's not always secure.
Okay, so hello, I'm going to talk about tokenized real estate, but first I'm going to talk a bit about the traditional real estate system. So in one way or another, we are all connected to it, whether as owners or as buyers, which ultimately makes the real estate market be in the top markets globally. But unfortunately, despite its size and big liquidity, there are multiple challenges which makes the market inefficient, such as transactions taking too much, sometimes weeks, sometimes months, and also there are multiple parties involved. So now to talk about tokenized real estate. Tokenized real estate is when a real estate property and its cash flow are converted to blockchain technology, therefore utilizing tokens and enabling digital ownership. So because of this, there's going to be an increase in liquidity. Also, there's going to be faster transactions. And overall, it's just going to address the inefficiency from the traditional system. So currently, there are two primary use cases for real estate tokenization. So first one is fractionalized real estate. So to put it in simple terms, a house is converted into multiple tokens, allowing for collective ownership. And this process is enabled via smart contracts in order to ensure that all parties follow the terms and conditions of the agreement. And the other use case is tokenized real estate cash flow, which also in simple terms, the cash flow generated by a property, for the example of rent, is converted into digital tokens. So now property owners can sell shares of the property's income for a specific period of time without the need of actually selling the property, which overall creates more flexibility for them and liquidity. Okay, now I'm going to talk a bit about the benefits of tokenized real estate. So first of all, we have liquidity. So as I said earlier, the traditional system is inefficient. There are challenges encountered in the regular system of buying a property, and tokenized real estate aims at eliminating these challenges by improving the process, reducing unnecessary third parties, and lowering the price barrier to entry. So for the example, as an investor, if I do want to invest in real estate, although I do not have the capital, now with tokenized real estate, I can just invest in 10%, 20%, which is just a big opportunity for investors. Now I also would like to talk about cost. So because tokens are facilitated via smart contracts, this will automatically execute transactions and improve coordination between parties such as mortgages, notaries, mortgages, notaries, and other parties involved, therefore reducing the cost involved in the process of buying a house. Fraud, blockchain, smart contracts, and decentralized oral phone networks will minimize the risk of manipulating the information of a property and also selling a fake property. And global market expansion. So the tokenized real estate market will reach beyond a country's borders, therefore will attract more international investment and investors. So all of these benefits from a growth perspective implies that the future of tokenized real estate seems to be bright, especially now as technologies such as blockchain and smart contracts and protocols are developing at a really fast pace, which implies that they will become sooner even more efficient and even more secure. So now, as for the governments, so governments play an important role as they're responsible for digital finance and investor protection. Unfortunately, the debate over whether real estate tokenization should be under securities regulation or to have its own rules will actually slow down the legislative adoption. And for small and medium enterprises, tokenized real estate will actually have a major impact on them, as blockchain technology, as we all know, is transparent and secure, which will present investors with new opportunities because now they can actually rely on these businesses. And businesses can also raise capital for their own growth. And I would also like to mention some of the current examples of how real estate can be tokenized. So for example, we have an NFT house, first one, which was sold in South Carolina. And we also have Dubai's partnership between a blockchain company and a real estate developer, which aims at tokenizing the real estate. And also about UK's initiative to simplify the real estate process by using a tokenized real estate system. And that's all.
Okay, so now I will take over with challenges and limitations in general. And the first challenge is legal uncertainty. So different countries and regulatory bodies have complex definition of the tokenized assets, and some categorize them as securities, other as commodities, and some as entirely new financial instrument. So this lack of regulatory clarity makes compliance difficult for businesses and investors. So next one, we have technological limitations. And many blockchain networks, especially those using proof of work, they struggle with scalability, and high transaction costs and slow processing speeds make it really difficult to handle large-scale financial transactions efficiently. And even for Ethereum, a leading blockchain for tokenization, it has faced some congestion issues, so it leads to high gas fees later. And lastly, there is a market skepticism, and traditional investors and institutions, for example, they remain cautious due to concerns over security and, for example, fraud and volatility in the crypto space. And additionally, the lack of well-regulated secondary markets, it actually makes it harder to trade tokenized assets and further limited some adoptions in mass. Also, I would like to talk how to address those challenges. And first, the clear and standardized global legal frameworks are really important to provide regulatory clarity. And second, scalability solutions such as layer 2 networks that is shown on the picture and proof of stake mechanism need to be widely implemented, and it will improve transaction efficiency. So third of all, trust needs to be built through investor education. And I say that transparent reporting standards and stronger security measures are important. So when you will overcome these barriers, tokenization can unlock new financial opportunities. And yeah, so that's the conclusion.
The conclusion of tokenization. Tokenization is reshaping the collectibles, art, and real estate industry by it offers enhanced security, liquidity, and accessibility. There are a lot of growing interest. It's now a small industry, but from governments, companies, and institutes, the interest is growing. And the future of collectibles, art, and real estate will be digital and decentralized.
Yeah, so we've talked a little bit about real estate, art, collectibles, but there are, of course, other commodities. For example, gold is a precious metal that used to be used for jewelry and works of art, but also to mint coins. And with modern technology these days, you can just buy gold. You can buy gold-backed tokens. So you basically don't have to worry about the physical possession of it. You can just have gold. It's also going to be easy to boats, planes, every other vehicle, commercial properties. They can all be tokenized, and each token will represent a fractional share. So investors worldwide can just purchase these tokens and receive rental income, proportional to their ownership. And what this tells us is that tokenization really creates opportunities to digitize and fractionalize ownership of physical assets. You do this by using blockchain, of course. And it allows multiple investors to own shares of traditionally non-liquid assets. Of course, you need governments and institutions to regulate and authenticate all of this. You need SMEs to develop platforms and tools, so you can have a little ecosystem where you can focus on that sector. So for example, in real estate, there's going to be a lot of partnerships with real estate developers, with people owning pieces of land. In art, you're going to have a lot of partnerships with museums, with galleries. Think about art school that are help create like the new future arts. And in collectibles, you just saw an example of physical NFT. So there's a lot of interesting things that are going to be happening in the future. And none of this is, of course, possible without governments and institutions to really lay the groundwork so we can have a good transition. So the future is looking very exciting, and thank you so much for listening to us.